If you have a bank account outside the United States, whether it is in India, Mexico, Nigeria, the Philippines, China, or anywhere else in the world, what you are about to learn today could seriously impact your financial future and even your immigration journey in 2026. This is not something small, and it is not something you want to ignore. We are talking about the $10,000 foreign bank rule, also known as FBAR, and why right now this rule is more important, more enforced, and more connected to immigration than ever before. Now, a lot of people hear about the $10,000 rule and immediately think it has something to do with large cash deposits inside the United States. That is actually a completely different rule. What we are focusing on today is something much more important for immigrants, the requirement to report foreign bank accounts to the U.S. government. This rule is officially called FBAR, which stands for Foreign Bank and Financial Accounts Report. Here is the key point you need to understand clearly. If you are considered a U.S. person for tax purposes, and this includes green card holders, many visa holders, and anyone who meets the substantial presence test, and if the total value of all your foreign accounts combined exceeded $10,000 at any point during the year, even for just one day, then you are required to report those accounts. And this is where many people make a serious mistake. The $10,000 limit is not per account, it is total combined value. So if you have 3 accounts with $4,000 each, you might think you are safe. But if those accounts together ever cross $10,000, even briefly, the reporting requirement is triggered. This is what experts call the aggregate trap, and every year thousands of people fall into it without even realizing. Now let's talk about what has changed in 2026, because this is where things get serious. There has been a major legal development that has made enforcement much stricter. Courts have now ruled that even reckless behavior, meaning you should have known about the rule but didn't bother to check, can be treated almost the same as intentional violation. That means you don't have to purposely hide money to face serious penalties. Simply ignoring the rule can be enough. And those penalties are not small. For non-willful violations, you could face fines up to around $16,000 per violation. For willful violations, penalties can go as high as $100,000 or even 50% of the account balance. In extreme cases, there can even be criminal consequences. This is real, and it is happening more often as enforcement increases. But here is the part that many immigrants are not aware of. This is no longer just a tax issue. This is now directly connected to immigration. Under new USCIS policy changes, financial responsibility and tax compliance are now part of what they call good moral character. This means when you apply for a green card or citizenship, immigration officers may look at your tax history, including whether you properly reported foreign accounts. So what does that mean in simple terms? If you fail to report your foreign accounts, it may not only lead to financial penalties, but could also raise questions during your immigration process. It does not automatically mean denial, but it can create complications that you definitely want to avoid. Now, let's talk about what you should do right now. First, check if you meet the requirement. Ask yourself, are you a U.S. tax resident? Do you have foreign bank accounts? Did the total value exceed $10,000 at any time? If the answer is yes, then you likely need to file FBAR. The filing itself is actually simple and free. It's done online through the FinCEN system, and it's separate from your tax return. The deadline is April 15th, with an automatic extension to October 15th. You'll need basic information, like account numbers, bank names, and the highest balance during the year. If you missed filing in previous years, do not panic. There are programs that allow you to correct mistakes without facing the harshest penalties. The important thing is to act early before the government contacts you first. Another important thing to understand is that the U.S. government now receives financial data from many countries through international agreements. That means your accounts may already be visible. The question is not whether they can see it. The question is whether you report it yourself first. At the end of the day, this is not about fear. This is about awareness and protection. The rules are stricter, enforcement is stronger, and the connection to immigration is real. But if you understand the system and take the right steps, you can stay safe, compliant, and fully in control of your future.